But yeah, Graeme is the head of tokenization at Polymath, and like we do want to thank them again for sponsoring the hackathon and making this all possible for everyone. So really big shout out. And we know that like Polymath's been working on a lot of the tokenization and security aspect for a lot of these like projects on chain. So yeah, why don't you take it away, Graham? Here.
Sure, sounds good. Thanks, Jerry. Thanks, Bitcoin Bay, for having me here. Always good to see you guys. I think I'll just jump into the presentation. So I'll go ahead and share my screen, and then we can get going. So share. So you guys should be able to see that. Looks all good. And I'll just put myself over here. Cool. Yeah, so as Jerry said, I'm Graeme Moore, head of tokenization at Polymath. If anybody's watching the panel, I think 2 or 3 panels ago, I was there as well. Just again, quick background, went to Queens, got my economics degree, worked at Richardson GMP, which is the largest independent IA in Canada, so outside of the big banks. I was the first hire at Polymath back in 2017. So it was kind of me and the co-founders working out of an apartment, which was very fun. Now we're a 50-person team. I'm also the author of B is for Bitcoin, which is the first ever ABC book about Bitcoin. So if anybody has any 1 to, let's call it 3-year-olds or 4-year-olds who needs to learn their Bitcoin ABCs, that's a great way to get them started. And I'm also on the advisory board of Red Swan, which I'll talk about a bit in the presentation. So yeah, some cool press about B is for Bitcoin. If you want to read the Financial Times article where they make fun of it, that's pretty good. There's also a really cool video by Vice as well. And so at Polymath, in one sentence, we make it easy to create and manage regulatory compliance security tokens. And so if you're from a technical background, the way I would describe Polymath, we're red hat for capital markets. So creating open source tools so that people can build things for capital markets and very specifically regulated instruments. So, not utility tokens per se, not NFTs per se. But if you're chopping up an NFT and it ends up becoming a security token, you're going to need to implement a lot of compliance rules that we can help with. And so did my share screen privileges just get revoked?
Oh, sorry. That's my mistake. I'll give it back to you.
Antoine, what are you doing, man?
Yeah, it's from the last presentation, and then I didn't realize you were sharing screen. My bad.
It's all good. It's all good. So I'll share again. Yeah, I think we're good. Cool. So jumping back into it, here we go. Yeah, so as I mentioned, we're 50 people, mostly from tech and finance backgrounds. That little pie chart on the right-hand side shows, I think this was in 2019, we were pushing more open source code than every other security token platform combined. So that's pretty cool. Our dev team is also unreal. Pretty much every time they enter a hackathon, they win something. Sadly, I don't think they're here today. But ETH Berlin, we won a MakerDAO prize, ETH NYC won the Aztec prize, ETH India, a hackathon prize, and ETH CC, a CTF prize. So security tokens 101, if you don't know, financial securities on a blockchain, stocks, bonds, derivatives, revenue share agreements, real estate, whatever the case may be. If it's expressing ownership in something else, it's probably a financial security. And so we deal with how those things can work in a compliant manner on blockchains. And so when we started thinking about Polymath, so early kind of 2017, really the huge target, and still remains the huge target for a lot of security token companies, is private securities. The reason being, they're incredibly expensive to create and maintain. They're very slow, they're very illiquid, market's very opaque, and there's limited functionality. There's not much you can do with a piece of paper that's sitting in a filing cabinet somewhere. And so it's still a gigantic market. So every year it's around $3 trillion in terms of private securities offerings, and that's just in the US alone. So a lot of people think that the public market is the largest market. It's not. The private securities market dwarfs the public market by orders of magnitude. Every single year, $3 trillion getting raised in the US roughly. And so when you look at security tokens, you get huge efficiencies when you use them. So you can go from T+3 settlement to T0, right? So instantaneous trade is actually the settlement, which is huge for back offices. If anybody knows anyone who works in a bank or brokerage's back office, you can get automation, and especially from compliance, so you don't have to constantly have a human being checking everything. You get massive transparency gains, so specifically with auditability. So for regulators looking into the private securities market, they usually don't know when something goes wrong until someone sues someone or causes a big fuss and says, hey, this thing went wrong. So what if regulators had actual real-time insight into what's going on in the private securities market? So that's a big gain for them. And then finally, you can get liquidity for private securities. So because you can program all these compliance criteria, And you can have these things actually trading on a functional secondary market. You can unlock some liquidity for some previously illiquid shares. And so before security token platforms, right, so this is pre-Polymath, very early 2017, Blockchain Capital and Science Blockchain were really the two big names that tried to create a security token. It was really expensive for them to do so. They had to hire all their own developers, right, costing $100,000 more. It was really time consuming. It took them months to do this. They had compliance issues ultimately, and they had to reissue their tokens. And there's limited functionality. Really, all it was an ERC20 token sitting somewhere. And so it didn't really work for them. And so what we said is, okay, there's this $2.9 trillion market every single year. The raw technology is there in terms of blockchains and smart contracts and being able to program compliance. But what's not there is the infrastructure. So having an open source architecture where there are standardized smart contracts, there's no simple interface. So no one could click buttons, right? So non-technical users, there was no way for anybody to click buttons and create and manage a security token. And there was no ecosystem of service providers. So in the capital markets world, you need custodians, you need KYC providers, you need broker dealers. There's a huge number of people that you need to help you with a successful, not only launch of security token, but then maintenance of your security token. So that really just wasn't there yet. So we said, okay, well, we need to get these three things, and then security tokens can take off. And so what we started with is that standardized set of smart contracts. So those open source standards that anyone can use in order to create some standardization across the ecosystem. So we started creating a number of Ethereum requests for comment, so partially fungible token standard, core security token standard, document management standards, and the list goes on. And those really all live under the umbrella of ERC 1400, which we call the security token standard. And so ERC 1400 was a culmination of us getting all the industry participants we could together in a room. So custodians, KYC providers, lawyers that were at the SEC, et cetera, and getting them and saying, okay, what does a standard need to look like for security tokens? And ultimately, we came up with all of these different standards, which live under the umbrella of ERC 1400. And so I don't know if people can unmute their mics, but does anybody know what this map is? Anyone at all?
Is that the railroad?
Yeah, railroads.
It is. Yes. Great guess. So this is a map of railroads in the US in 1860, 1870, you see they get across the country, 1880, and then 1890. And so if you look at what's in the blue rectangle, there's no real necessary reason why there's so much more railroads in railroad activity inside that blue rectangle versus the southern US, except when you learn one really crucial factor, which is that inside that blue square, they standardized the measurement of railroad tracks. So everywhere inside there, railroad tracks had to be 4 feet and 8.5 inches wide. And so what happened in the southern United States is there would literally be times where a railroad track operated by one operator would meet a railroad track operated by another operator. They would have to pick the railroad car up. They would have to adjust the width of the wheels, and then they would have to set it down on the new track. And so terrible infrastructure. And so when people are speaking different languages and they don't really have a standardized way of doing things, it's really hard. But once you have everyone speaking the same language in terms of, in this scenario, railroad tracks, 4 feet, 8.5 inches, all the axles can be the same, all the wheels, all the train cars, all the tools, things that are inside the factory, all of the seats that you're making, all the tankers, all the cross beams, everything can be the same once you have this standardized method of doing things. And so whether it's railroad cars, whether it's ISO standards for something like Swift, whether it's TCP/IP, ERC20 for utility tokens, or ERC 1400 for security tokens, the world loves standards. It just makes everything easy, especially when you have a number of different participants that have to talk together. And so that's really the standardization side of things. The next thing we started focusing on as well was that easy to use user interface. So this is how you can use the Polymath Token Studio today to create and manage security tokens. Click buttons, right? So very easy for non-technical users. The only difficult thing that I'd say is, you have to understand how to use a Web3 wallet, or in the case of Polymesh, which we'll talk about in a bit, a Polymesh wallet, but really just clicking buttons. So a lot easier than going into your command line interface and trying to figure out how to create a security token that way. The other thing is you get these huge benefits in terms of time reduction and cost reduction, especially for things like corporate actions and dividends. So traditionally, if you had a private security and you had, let's call it 100 shareholders in your private security and you wanted to pay them all a dividend, you have to wire them money individually from your bank account to theirs. Huge time consumption, A big waste of money when we now have these things called blockchains, where you can fire off payments in an automated way that cost pennies or dollars. And so really, really beneficial in terms of that. Once you start getting more and more things on blockchains, not just the security token itself, but more and more of the capital markets infrastructure. And so the final thing I mentioned earlier, those first three things, was the ecosystem, right? So Polymath sits in the middle as this technology provider, this glue that allows all these participants to talk together. But you still need advisors, you still need KYC and AML providers, you still need custody, you still need marketing, you still need investor portals, you still need legal help. And so we've built an ecosystem of now more than 50 service providers that are all comfortable using our technology and working with the issuers that are using our technology as well. And so before, security token platforms cost about $100,000 or more to create one of these things. Now it costs about $500. It was really slow. It took months. Now you can do it in minutes. There were no compliance standards before. Now it's easy to program compliance, and even easy for non-technical users, which we think is really key, because a lot of people who are going to be clicking these buttons are broker dealers or transfer agents, and they're not necessarily developers. And then finally, we went from a world where these security tokens were really limited in their functionality, but now there's tons of functionality. There's things like voting, things like dividends. You can have forced transfers. The issuer can control their tokens completely, which is really necessary when you start getting into the world of regulated financial instruments. And so in 1 year, so this was 2019, 157 security tokens got created using our platform. Some of the cool ones, it's Red Swan, which I'll talk about even more in just a bit. They've tokenized $2.2 billion of commercial real estate. Blockwake's an exchange in the US, and they're really excited about people being able to trade security tokens peer-to-peer in a compliant manner in Asia, because they have a lot of investors in Asia. Ping Asset is an Internet of Things company, and Market Lend deals with corporate debt. So they have a platform where people can buy and sell corporate loans. And one of the cool things about Market Lend is they're based in Australia. They actually created their own Australian dollar stablecoin because they recognize that as more things come on the blockchain, you get more and more efficiency gains. So the users of the Market Lend platform, they're clicking buttons and they're saying, I want to invest $100 in this loan, or I want to invest $1,000 in this loan. What's actually happening behind the scenes is an Australian dollar stablecoin that they've created is moving from their wallet to a security token offering smart contract. And the security token offering smart contract is conducting an atomic swap, and it's sending back the correct amount of loan tokens to their wallet. But all they see is on their screen what they would normally see. Just getting those efficiency and automation gains on the back end for a company who's dealing with a number of different clients. And so Red Swan, right, $2.2 billion in commercial real estate. They used our technology to do that. I'm also on the advisory board. So you can go on their site. It's for accredited investors only, which not everybody likes to hear, but it makes things easier from a compliance and regulatory perspective. But so they have a number of really cool properties that you can invest in today, and the minimums are something like $1,000 for most of these properties. You see there, it's like 1,000, 9,000, 16,000. Those have actually come down since I took the screenshot. And so the really cool thing that I always love to talk about, especially in terms of real estate and tokenization, is how hyper-targeted investments are now becoming with this technology. And so what I've done here is just Google Maps screenshot. And let's say I wanted to buy real estate in Manhattan, and I buy a REIT that has exposure to real estate in Manhattan. Well, those are the buildings that I'm going to get. Some are going to be on the Upper East Side, some Upper West Side, some are going to be sort of Midtown, some are on Fifth Avenue, some are off Fifth Avenue. And that's how targeted you can get today. If you want to make an easy, just point and click, buy exposure to New York real estate with something like a real estate investment trust, that's the exposure you're going to get. What if I wanted to buy stuff that was only on Fifth Ave and that was only between 34th and call it 86th, right? So I can eventually do that with security tokens, because what's going to happen is all the cash flows and all the ownership represented by every single asset in the whole entire world is going to be available for purchase. And so then what I can even do after that is I can buy only real estate that's looking inward. So I only want the units that are looking inward to Central Park below 86th that are above the 7th floor. Right? And so that's the stuff that's going to happen soon. So we're seeing sort of the early days of that with things like SET protocol. If anybody's familiar with SET protocol, where anyone can create their own portfolio of assets and anyone can invest in them. And so I think that's where we're eventually going with this. And it's still pretty early days, but those are the things that I'm really, really excited about in the future. And so what's next? Polymesh is what's next. So initially when we were building our technology, You know, we were building it on Ethereum. That's where the developers were. That's the way we could get to market really quickly. And Ethereum was live. You know, in 2017, there weren't a whole lot of blockchains that were smart contract capable that could provide the features and functionality that we needed to be able to provide. And so building your own blockchain is a huge undertaking. And so doing that at the beginning of your company's life cycle, it's potentially not the best way to do that. So another corollary, they're Dapper Labs, who are from CryptoKitties fame and now focused on NBA Top Shot. You know, they've started building their own blockchain. They have their own blockchain now called Flow. But initially they built it on Ethereum. The easiest way to get the word out there and to get early traction. But as we were building on Ethereum, we noticed there was an inevitable problem where Ethereum's mission has always been unstoppable applications, which is a really great feature from a utility tokens perspective, but it's really a bug when you start thinking about regulated security tokens and Polymath's mission, especially, which is being compliance first. So our thesis became that security tokens of the future will not live on blockchains of the past. They'll choose to live on a purpose-built, compliance-focused blockchain. And we've seen this time and time again. We've seen phone lines that were originally how people got internet access. You see users demanding upgrades in terms of speed, in terms of reliability, in terms of usage. You know, someone hanging up the phone means, or someone picking up the phone means you're not on the internet anymore. Users just don't want to deal with that eventually. And so you move to a purpose-built infrastructure like fiber optic cable. We're seeing the same thing happen in the blockchain world where people start building things on Ethereum, which is a general purpose infrastructure. Anyone can build anything. And then users start demanding upgrades, speed, reliability, governance, identity, confidentiality of assets, compliance, and then someone builds something that's purpose-built, that's actually built from the ground up with the respect of the specific use case in mind. And so we're seeing that now with Polymesh. And so I just mentioned what we call the 4 pillars of Polymesh: governance. So when you talk to a large financial institution and you talk to them about issuing $100 million of securities, let's call it $100 million bond on Ethereum, and then they realize that if there's a fork of Ethereum, like there was with ETH and ETH Classic, there are now 2 security tokens that exist. You know, that's just a non-starter for them. They just can't really wrap their heads around that. You know, which is the real security token? Which one has the real claim to underlying assets? Has the claim to underlying assets split in 2? How do I decide which security token is the real one? Is it based on a governance process? We wait a week and see which one has more mining power. You know, it's just a non-starter for a lot of financial institutions. So on Polymesh, we have a forkless architecture. So it's built on parity substrate, if anyone's familiar with that, which is what Polkadot is built on. The second one is identity. And so again, talking to a lot of large financial institutions, are you okay with Ethereum or Bitcoin or Tezos or whatever being completely pseudonymous? A lot of them aren't. And so on Polymesh, you have to go through a KYC provider. You have to go through a KYC process to onboard onto the chain. And so on top of that, the nodes that are actually signing blocks and creating blocks, they're actually all regulated financial institutions on Polymesh. Confidentiality, you know, we're getting there. We put out a pretty interesting paper on that. Still to be determined exactly how that gets implemented. A lot of fun and exciting challenges. So if anybody's really into cryptography and figuring out that stuff, please send me a message after this. We would love to talk to you. So confidentiality is huge. Yeah, please. So confidentiality of assets is huge. Again, when you're talking to financial institutions, if Goldman Sachs finds out that JP Morgan has a $100 million trade they're about to make on an asset, that's bad news. So confidentiality is huge there. And on something like Ethereum, for example, you know, everything is public. And so really figuring out how can we address privacy while still allowing that regulatory compliance layer to remain intact. And then finally, compliance. So we've actually already reached Ethereum gas limits in effectively year 3 of development. So imagine what happens in year 5, year 10. So a lot of what we call the financial primitives that are necessary for security tokens are baked in the base layer of the chain. So Polkadot actually doesn't have smart contracts today. Polymesh does not have smart contracts today, but we're still able to do all of the necessary compliance, set all of the necessary compliance rules that anyone would need just by how we've architected the chain. So I can still make sure that party A and party B can only transact if I, as the issuer, allow them to, things like that. And so in terms of where we're at in development of Polymesh, we have an incentivized testnet today. So we announced that a couple weeks ago. We now have 2,500 people who've onboarded onto the ITN. And so you can actually onboard right now if you want. And so you can start earning points and learning about Polymesh. And so the points get allocated to a pool of PolyX that we've created for once Polymesh goes live into the Genesis block. And so if you earn points, you actually get rewarded with real PolyX once the mainnet goes live. So easy way to earn some free money and learn about some cool blockchain tools that you might be interested in using. Any developers, you can go check out our GitHub. Polymath Core is what we built on Ethereum. We have the Polymesh SDK, which is how anybody can build anything on top of Polymesh. So actually our tools are all built on top of the SDK. And so other people can build tools on top of the SDK as well. So you don't necessarily have to be a blockchain developer to build some tools that people might want to use. You can also check out the node for the Polymesh blockchain. Again, just a bit more information if anybody is curious. So our white paper, how to get started with the testnet, our GitHub again, and our Medium, where our developers love to write a lot of really interesting things. And so that's really it for me. Here's how to get in contact with me. I'm on Twitter pretty much all day, so that's probably the best way to reach me. Just send me a DM or tweet at me, or send me an email, Graeme@polymath.network. Those are our socials at Polymath. So I think I'll stop sharing my screen there, and maybe I'll take a breath now. And I think we've got 10 more minutes. If anybody wants to ask me any questions, happy to answer.
Yeah, I have a question. So I've actually worked with a couple companies that use MPC and like a forked version of the Ethereum network to have like kind of like a privacy wrapped coin. And one of the most, I don't know, the one that I'm actually the most deep in is called Incognito. Their coin is PRV, and what they do is exactly that. Like if you submit Bitcoin, you get P-Bitcoin, or a privacy version of that coin. Is that something that you're willing, like looking to explore? Or are you looking to more build your own custom type of MPC privacy shield network?
Yeah, so we're probably going to be building something that's proprietary. And so in terms of the solution that you just described, and this is like a little bit beyond my technical knowledge, so I'm just sort of spitballing here.
Okay, yeah.
But in terms of that, it becomes really hard to still maintain the compliance criteria. Because for most of the tokens that exist, right, when I send Bitcoin to somebody, no one can stop that transaction. It's kind of the whole point of the Bitcoin blockchain almost. But on Polymesh, the issuer or the controller of the asset, or their transfer agent, or their broker dealer, or whoever they're working with, they have to be able to stop any transaction that can occur.
Oh,
they have
okay,
to be
so
able to move tokens
they
at
are
any time.
They're like the stopgap, or the like validator, or like kind of like almost like multi-sig. You need both to
pretty much, yeah. That's a good way to think about it.
Cool.
You need the issuer's approval, and the issuer doesn't have to approve every transaction. They can set it up that way, but generally, what happens in terms of the architecture of Polymesh is we use a system of attestations. So the issuer of the asset can set attestation providers. They can set themselves as an attestation provider, and then they make an attestation about account 0x123, and they say 0x123 is a Canadian. They're an accredited investor. Their buy lockup is this date. Their sell lockup is this date. And if they make
Very
that,
cool.
then that person may meet the rules of the compliance criteria of the token. They may not. If they do, then they can transact with other people who meet the compliance criteria of the token. And so that's how that works.
So,
I can send you over a paper that we've done. So it's called MERCAT,
Yeah.
mediated
Yeah.
encrypted reversible secure asset transfers. I can send you that over.
I mean, I took a couple of cryptography courses in school. I'm a software engineer, but yeah, I have a fascination in MPC, which is multi-party computation, and multi-sig stuff. So yeah, I'd love to share some ideas and share some thoughts. So
Definitely.
Yeah. Hey,
hit me up.
Graeme, can I ask, how easy would it be for startups or like early stage companies to get onboarded to a company like this, to a platform like this?
Very simple. So on our Ethereum-based product, you need a MetaMask wallet and some Poly and some ETH. So pretty simple. On Polymesh, you need some PolyX, a Polymesh wallet, and you need to pass the pretty simple KYC process. So in terms of using it to create and manage assets, very easy. In terms of building some more complex tools on Ethereum, anybody can go check out ERC 1400. You don't need our permission to go look at ERC 1400. You don't need our permission to look at our Ethereum-based GitHub. We're potentially going to end up making the SDK a paid service on Polymesh. So that's kind of still to be determined in terms of how we want to shake out things from our revenue generation point of view. But yeah, that's the idea today. If you want to use the platform, go for it.
How would you throttle the SDK use?
How would we what? Sorry.
How would you control the SDK use? Yeah, I guess it would be like a paid access, not really like a pay per use.
Yeah. It'd be paid access. That's the idea we're thinking right now.
Cool. Yeah, I'd love to
here.
talk further. Sorry.
So my project Black Magic Bank, one thing, so it's essentially the kind of pitch is a mobile first federally regulated credit union. And a big thing about that is, with credit unions, they're co-ops and everyone who's a part of it gets voting privileges. And I'm planning on tokenizing. And one big thing I'm running into is the regulatory and legal compliance part. So I guess my question is, if I'm making a security token with you guys, how does it work for an everyday user to interface if they want to open an account and then they receive that token? How would that work with on your end?
Yeah, so I think the important part is that the platform and what we built is very flexible. It's very modular. So if you need certain components, you can use them. If you don't need certain components, you don't have to use them. And ultimately, you can build whatever you want. So we're not going to say you need to have your tokens be sent to your users in this way or this way. And then another interesting note on that is, so today, what a lot of people don't like is that their users would have to download a wallet. And so a lot of people don't like that. And so what we're actually building right now is a relayer service where you could actually pay for the gas transactions and the signing of transactions by your customers. And so your customers actually never have to download any external software whatsoever. So they can actually only use your software. And you pay a fee to Polymath per month, and we'll actually coordinate it such that your users can still sign transactions and approve that they want to do things, but you are actually never having to touch any blockchain tokens whatsoever if you don't want to. So that's another interesting thing.
And then with potential like interoperability onto other secondary markets, do you have thoughts on that? I don't know the regulatory part of it, but how would that work? Let's say if people say, I want to sell my share on a secondary market because I want to leverage that or whatever.
Yeah, so your call. Do you want your tokens to trade peer-to-peer only? Do you want them to get listed on something like T0 or Open Finance Network, or do you want them to trade on something like a DEX? It's completely your call how you want to do that. The important thing is Polymath does not control your tokens. We do not own your tokens. You have complete control. And so the mechanism of how tokens get created is you essentially call the factory and you say, hey, factory, give me a token. The factory gives you a token and it's yours now. You own it. The factory does not own it anymore. Polymath does not own it. We cannot, if the government called us and said, hey, there's illegal activity happening with this specific token, we can't do anything about it. And so you own it. You have complete control. You decide what compliance criteria you need. We're not going to tell you need to have this transfer mechanism. It's completely up to you to decide how you want that token to be governed.
All right, cool. I haven't heard of you guys before, so I'll check you out.
Cool, thanks.